Alex and Mia, thank you so much for coming in today. I'm really excited that you've decided to take this important step in planning for your future. We've been spending a lot of time discussing your goals and expectations, but before we can really dive into some of those, it's important to understand your current financial position and also your financial statements. You've also expressed an interest in further understanding your net worth and how certain transactions that may occur over the next year will impact that. We're going to discuss how each transaction will individually impact your net worth, and then we'll discuss how, as a whole, your net worth will be impacted. Before we dive into that, it's important to know how your net worth is calculated. And to calculate your net worth, you take your total assets minus your total liabilities. And based on the information that you provided on your statement of financial position, we can see that your current assets are $620,823, and your total liabilities are $118,036. And this is as of January 1st of 2018. So the difference between those two numbers will be your net worth, which your current net worth is $502,787. The first transaction we discussed is paying off a credit card that has a current balance of $5,000 with money from your savings account. In this transaction, we're going to see a decrease in your assets, which would be your savings account, of $5,000. And we're also going to see a decrease in your liabilities of $5,000, which would be the $5,000 paying off that credit card. Since your assets and liabilities are decreasing by the same amount, this transaction will cause no impact on your net worth, and it'll remain at $502,787. Now, the next thing that you think or you feel will occur in the next year is that your mutual fund portfolio will increase by 7%. The current balance of your mutual fund portfolio is $13,600. If the mutual fund portfolio did in fact increase by 7% over the next year, that would take your mutual fund account balance to $14,552. This accounts for a $952 gain and would be an increase in your net worth of $952, since this is an increase in your assets. Next, Alex, you have the opportunity to buy sports memorabilia worth $1,000 for $800, and you would use funds from your checking account to pay for this sports memorabilia. Now, in this transaction, we're going to see two separate assets impacted. First, we're going to see your checking account decrease by $800, but we're also going to see your sports memorabilia collection, the value of that, increase by $1,000. So in this case, we're going to see your new asset total go up from $620,823 to $621,023. There's going to be no change in your liabilities. Those are going to remain at $118,036. This is going to bring your new net worth total to $502,987, which is a $200 increase over what your net worth was on January 1st, when it was at $502,787. Now, Mia, you're looking at purchasing a sports car in the next year. And you know, we would all love to have a sports car. And the sports car that you're looking at has a value of $25,000. And you're looking at financing this purchase with no down payment for 60 months at 3.9%. Now, in this transaction, we'll see your assets increase by $25,000, which is the value of the sports car. But when we're calculating the impact on your liabilities, we're also going to have to figure in the cost of financing. So when we break it down and we have a $25,000 loan at 3.9% interest over 60 months, we can see that your monthly payment is going to be $459.29. You'll pay the same amount over the next 60 months, which would bring your loan total to $27,557.40. So this is going to increase your liabilities to that amount. So when we increase your assets by $25,000, your new asset total would be $645,823. When we increase the liabilities, that's going to be $145,593.40. And that's taking into account the total loan, which would be the $27,557.40. So when we take the new asset total minus the new liability total, we can see that your net worth after this transaction would be $500,229.60, which is $2,557.40 less than your net worth on January 1st, 2018. So we've talked a little bit about how each transaction would impact your net worth individually. But now, if we look at if all of those transactions occurred over the next year, what would the total impact on your net worth be? We saw the first transaction had no change on your net worth. The next transaction of the increase in the mutual funds would increase your net worth by $952. When you purchase the sports memorabilia, that had an increase of your net worth of $200. And then purchasing the sports car would actually decrease your net worth by $2,557.40. After all of these changes, we can see that your net worth on January 1st of the $502,787 would now be $501,381.60, which is $1,402.40 less than what your net worth was on January 1st, 2018. So when considering all of these transactions, we can see that there's actually going to be a negative impact on your overall net worth over the next year if all 4 transactions occurred. Does that make sense to you? Are there any transactions that you would like me to look into a little bit deeper or discuss a little bit further?